Good evening. Good evening. You're almost welcome to today's session. Today, we are going to be handling a very interesting topic from the SMC concepts. And this topic, of course, might not be new, very new to us. I'm sure most of you have come across, this tool and also are now implementing and using it in your trading. So today's session, we're just essentially going to get to understand what this tool is, and of course, how can we, use it in our trading. And of course, we'll wind up by showing, where we've been able to see some of these areas where we've been able to see this tool develop in the market. Yeah. So let's start without wasting time. So we are going to just go through the presentation, and then we shall be able to draw this tool on TradingView. So what's buy-side liquidity? So buy-side liquidity represents the demand from traders who want to enter long or buy positions. And of course, buy-side liquidity is the measure of how many market participants are willing to buy a specific CFD at a given price. What is sell-side liquidity? Sell-side liquidity represents how many market participants are willing to sell a specific CFD at a given price. And we are simply saying that higher sell-side liquidity means there are more potential sellers for a particular CFD, making it easier for buyers to find counterparties and execute their trades. So I'm sure most of you, of course, understand what CFDs are and how CFDs are traded. So we are saying CFD trading is essentially margin trading. And of course, we benefit from buying or selling, by depositing a certain amount of money in our brokerage account. And that's what we actually utilize when we're doing any trading. So liquidity voids, just as you can see here, are in the form of sell-side or buy-side imbalance zones. And essentially what usually we are looking for is we're usually looking for these sell-side or buy-side imbalances for us to trade into them, or buy or sell into them for that we can make money. So liquidity voids occur when there's a lack of buy-side liquidity, stroke sell-side liquidity, causing aggressive market movements, and their closure depends on market conditions. Anticipating price ranges can help fill these voids. So I'm just going to go through a few more slides here, and then we shall cross over to TradingView, and I'll be able to show you in real time how do these patterns form and how can we essentially utilize them when we're making our trades. So before we do that, it's important to understand what a buy-side imbalance is and what a sell-side imbalance is. And of course, also very important, what inefficiencies are, okay? So inefficiencies are just points in a market where you find price moving to a very high point. And whenever price moves to a very high point, what usually happens is that we'll normally have a reversal. So that reversal will usually be what we'll anticipate whenever we have an imbalance forming. So whenever you have price aggressively moving higher, then we normally call that a buy-side imbalance. And because the sellers were not enough in the market, we'll normally call it an efficiency. So whenever there's an efficiency, it means that we have to essentially look for a potential reversal back lower. And of course, when we get that reversal back lower, then we'll most probably go in for a buy, rather for a sell. That's in the case of a sell side inefficiency. So if it's a buy side inefficiency, we'll essentially be looking for a trade back to where price was, because when that void is made, what happens with price action is that unless that void is filled, price will not continue in a particular trend. So what traders actually look out for when they're using this tool is that we'll essentially be focusing on how can we utilize the void to be able to make money. Okay, so before we go to the key considerations, we are going to cross over to TradingView, and I'm going to illustrate for you in a simple form how you can actually use this tool to make money. So this is what we have. So right here, we have a plain area, which we're going to use for making our illustration quite simply. So for us to do that, we are going to draw, right? So price essentially forms in this form. So we usually have price action, having such a movement such as this. And what normally happens is that you'll always have a movement such as this one. where you'll have price, moving in this kind of form. So I'm just trying to depict for you here how price action essentially usually moves, and then I'll be able to show you what this means. So this is just simple price action, okay? And we're just going to mark out these points for ourselves so that we can actually understand how, what these mean, and, how can we be able to understand when we see this in the market, how do we, infer, meaning from whatever we are seeing. And then, of course, how can we now trade into this market? So this is just simple movements. And we are now going to essentially mark out what this means, right? So we're going to start with what's down here. So what's down here, I'm just going to write it out in text so that even you guys who are taking notes, you can actually be able to, to take notes, along with this. So what we have there, I'm just going to mark the characteristic of what price is telling us there. So right here we have, I would say, equal highs and equal lows, not too perfect highs and not too perfect lows, but they are all in a certain kind of range there. We also have price consolidation, okay, or inefficiency. So why I'm calling it inefficiency here is that essentially, why I'm calling it inefficiency here is because we have price moving higher and lower, higher and lower. So whenever you have price in a consolidation moving higher, lower, and higher and lower, there is a bit of a disconnect from what the buyers and the sellers are doing. And because of that, we tend to believe that the market is not fairly priced. So because of that, the market will usually move to correct that imbalance. So we have equal highs, equal lows. And of course, here we're having potential for trend continuation or trend reversal. Okay. Now, this is what we are seeing. This is what we are seeing right where this box is. Okay. Now, some instances you'll find, and of course, in this case, what happened is that we had price moving in one quick form where it moved all the way this side. So usually sometimes in case price does not move in one straight form, it will usually move like this. So you find here, you'll find maybe price moving in this kind of formation, okay? So here we'll have move higher, retest, and then a move up. So in this case now what we're having here is just something that we'll call market structure shift, okay? So this normally will have, you'll always have to mark your point there. So you can come and you mark as your MSS or market structure shift, right? So right at this point, we saw that actually the market changed how it was moving. It was first in a range, and now after this retest, we had price moving higher. So what's forming here is now what we can attribute to something that we can now call, we can call this BC, okay? So BC, in this case, we have an aggressive induced move higher. And of course, this aggressive move higher, okay, is in the form of a buy-side imbalance, okay? So buy-side imbalance and sell-side inefficiency, okay? So what's happening here is essentially what price has done is that because of a clog up of buy orders, so it can happen in two forms. Sometimes there could be a clog up of buy orders, but other times it's also because of something we call, a fundamental event. So like, for instance, when you have like CPI, okay, if CPI comes in lower, and if you have an asset, say maybe like GPP USD, okay, so GPP USD is essentially going to have a sharp move higher, and this is because you're going to have a lot of traders in the market piling up buy orders. So that's what now will create that imbalance, okay? So when you have this imbalance formed, this imbalance will now form a void, okay? So why we are calling it a void is because price has gone into uncharted territory, okay? And because this void has formed, essentially what we shall be looking for is price discovery or a displacement of price back to this level where it was trading at, or possibly closer to it, or even much lower than it, right? So that's how we can essentially use this tool when we're trading. So whenever there's a market structure shift higher, would ideally be looking to look for trades where we're trying to sell back into this void that has been created. So this void that has been created we are seeing it on this end, but now we'll also be able to see that when price gets to the other side, right, we're also seeing that there's a void that has to be filled. So you can see how the market sold into the void, and of course it went into the same kind of range that it had, when it was trading at this stage here. So when we are looking for trades here, ideally what our focus will be is to look for trades within that pause in price. So when price has a market structure shift back to the upside, we are going to be looking for trades where we are going to be selling into the market, or we shall be looking for the market to reverse back and fill this void that has been created. So you can see that what happened here was price actually reversed lower, and we saw price displacement into the void, filling it, right? Now, in this case, this is actually, would call this a bearish fair value gap, and ideally would be looking for trades into that fair value gap, right? So that's essentially how we can use this to trade. Now, you can notice that here, when price actually came and filled this void, it now moved higher. So sometimes you'll find price action will not continue into a certain area until a certain void is filled, okay? So this is essentially how we can look at trading this. So now I'm going to cross over to a chart so that we can be able to look at certain areas where we have had these voids filling and how we can look to trade them. So let's pull up gold, and I'll be able to show you what gold is doing. So this that we have here, we have gold right here. And as you can see, this is gold on the 2-hour chart. This is on TradingView, okay? So essentially what gold did here is that we saw it having equal highs and equal lows that we marked right here. So I'm going to just mark these for you. So we have this here, okay? So of course, the points we are marking are these points right here. So these are our equal highs, okay? We have them somewhere here. And of course, we have our equal lows here. So what price did is that you can see it sold into this area here, okay? So you can see what it did. It sold into this area. And now this sell that it did, we can actually call this buy side inefficiency. So we call this CB. So CB would be meaning that when gold sold into this area, we had a sell side imbalance, okay, and a buy side inefficiency, okay? So when we talk about buy side inefficiency, what we are trying to mean is that price essentially got into an area, or it made an aggressive move where there was zero buyers present, or there were more, I would say there were more sellers present than buyers, okay? So whenever it makes a move like that, it will then get into consolidation. So as you can see, what gold did here is that when it sold into this zone, we saw it consolidating, okay? And of course, we had those equal highs and equal lows forming around here. Now, keep in mind, guys, this is on the 12 hour. So even when you switch over to a line chart, you can see the kind of price action we're talking about there. Gold sells, gets into this zone. And of course, now it starts to correct that move higher. Now, we'll go back and see what are the key considerations. But what we are seeing here is there was a market structure shift, and we are seeing that visibly with how gold got into some kind of a consolidation there. You can see this, okay? Sold, got back in, sold, got back in, sold, got back in, sold again, moved higher, made a bit of a move here, then made a structure break, and now you can see where gold is trading at right now, okay? If I switch this to a line chart, it's actually quite clear, okay? If I were to hide the line chart for you, change it to white, okay? Do you see what I mean now? Do you see that clearly? Now I've hidden the line chart, but you can see the kind of structure, okay? So we had equal highs and equal lows here. Equal highs and equal lows. Okay. And of course, the equal highs and equal lows, then we had the structure break. So the structure break here would mean the structure market shift. So here we had price breaking this level and then essentially making a move higher. So now this one would then mark our MSS, which would mean that we're having now structure changing, okay? Now, if I bring back my candlesticks, so let me just bring back my candlesticks. Now you can see it much more clearly there, okay? The MSS happened right at this point where gold moved lower, and then we had the break, okay? And of course, even at that same point, we are seeing higher highs, and of course, we are seeing higher lows, okay? So when you have a combination of this, that's now where we are saying we can now go in for a buy, okay? So now, if you notice here, we had a void. So this void was filled on this side of the market. So when you saw gold actually selling into this area, we had, you know, a void that was created. So a void was created when gold sold from 2003 all the way down to 1932, right? And now immediately when it sold back here, we saw that reversal in the form of a fake out where market tried to sell below this low point here. But immediately it sold, we saw it reversing and moving higher. So when immediately did that, what happened? We then saw structure breaking higher. Immediately it broke. Then now we are seeing gold trading up here. So you can see that this void, which was formed when we had the buy side inefficiency, was actually corrected. And now we have, you know, gold trading where it is up there, okay? So now it's easy for you to look for these examples on several charts. And of course, how you're looking for a trade in this case is that you're looking for how can you sell into, rather buy into the void. So if you have a sell side imbalance in the form of a buy side inefficiency, you're actually looking to buy into the void, right? Because the market will correct itself. It might not do that immediately. It might not do that in maybe in a few hours, but it eventually does it. So it took gold about, I would say, 10 days for it to correct this void that was formed in the market. And it's when this void forms that actually now you can actually now look for trades and see how you can benefit from those voids getting filled. So let's just quickly look at one more example, and then we can quickly go and see what the key considerations are when we're using this tool. So we're going to cross over to BTC USD and also look at BTC USD and understand what kind of structure it's been having. So for BTC USD, we can change the time frame. We can maybe go to a 1 hour time frame for us to see what's happening for it. So now for BTC USD, you can see here that we actually had equal highs. So if I mark my levels there, you can see that actually at these points here, we had our equal highs here, right here. Okay. And same thing also when you look to the other side of the chart or to the lower part of the chart, you can also see here that those points were actually quite clear. Okay, so right here, we also had, those equal highs forming. So now what's essentially happening here is that we saw this void that was filled, okay? So this void right here on this end, I'll just sort of like, not to make my letters so big, I'm just going to reduce the size. Hopefully you'll be able to see them. Let me just make this bigger here, okay? I think that's clearer. So here, we have a BC. So BC is on this side. And of course, the BC, we saw that the move was a move higher, okay? So immediately we had the BC, we had a void. So you can see that immediately Bitcoin came and filled that void. And actually, we also had a CB on this case. So it moved higher, corrected that void that moved lower, okay? Now, on BTC, it actually forms these inefficiencies quite often. So you can see that the sell side inefficiency was formed here. Then, of course, immediately that inefficiency was corrected and we saw the price moving lower, okay? And you can see that since this price now corrected itself and started moving lower, we saw now that there was, previously it was a sell side inefficiency that was then corrected by an equal move lower. But then immediately that happened, price then was fairly, price was then fairly, we can say price was fair and the market was moving as it should. But then when it got into this move right here, okay, we saw that there was actually a structure break lower. And that then meant that now we were having a void that was filling in a form of a buy side, a sell side inefficiency. So now, rather in a form of a buy side inefficiency. So immediately this happened, we can see that price immediately moved higher, and we saw that this void was immediately filled. So now what that means is every single time it does this and you've marked your equal highs and equal lows, you can actually be looking to sell into the voids. So the moment a void is made, so in this case here, this is a void, okay? Right? We can also see the same void filling here, okay? So what you're going to do here is you're going to be entering trades around the equal highs or equal lows into the voids. So these voids can be either BC to mean buy side or sell side inefficiencies, or CB, okay? Right? Now, that's essentially how you trade using this tool, okay? Now, how would I essentially look for a trade now where Bitcoin is, BTC USD is trading, and how you can trade it on the FX Pesa platform? Ideally, you're going to be looking for a test of that level. In case we don't have a move higher, but we have maybe a move like this, move lower, retest, move lower, and then a break. So in this case, now we have an MSS. So MSS would mean that we had a clear structure break there or a market shift, and that would now mean that price is now moving higher. Now, keep in mind that we didn't have that much of a void in this case. And you can also see here that the structure started changing progressively. So you can see previously we had the market moving lower, moving higher, moving lower. But in this case, you can see things change. So what happened is here, the structure is slowly changing, and you can see market is getting ready to, change its movement. So you can see this is what is likely expected for Bitcoin. We might have it possibly moving higher, moving back lower, and then possibly breaking to move much higher. So let's look at the questions. Lawrence, you're asking, does that show that gold might sell? Let's quickly go to gold and see what we had drawn on it. Keep in mind that my gold is actually on the 2-hour time frame, okay? So you need to keep that in mind. Lawrence, you're saying, does that show that gold might sell? So for right now, gold is definitely had a structure break at this level here. And you can see that right now it's now possibly moving much higher. Okay. And it could possibly even move and retest levels above this side. Keep in mind that on a higher time frames, gold is essentially having some kind of it's now in a new, bull move, and we could see it testing much higher levels, possibly upwards to 2080 or 2070. Okay. And of course, the other reason, of course, like I mentioned in the snapshot, and of course, one of the reasons why gold is having that aggressive move higher, it has a lot to do with the futures market. Okay. So the futures market, is essentially is what we use whenever we are trying to see what the different market players are doing. So what happens in that case is if the futures market has higher settlement prices for gold, that then indicates that most players in the gold futures are expecting gold to have higher prices. So we'll see that reflect also with whatever it is that we're trading, right? So that's how we can ideally, infer using the futures market when you're looking for trades. So I think that's really it. And we can essentially use this tool really when we are looking for trades. That's what you need to use. But before I close the session, I just want to quickly show you this slide so that you can be able to, to take this into account whenever you're using your trades. Whenever you're looking for trades. So just wait a moment. Let me just show this to you quickly. Okay, so this is what's important for us as we finalize this presentation. Let me just show you this quickly. So someone might ask, what are the key considerations that I need to take into account whenever I'm using this tool? So they are right here, okay? So we are saying the first one and most important is the time period for price fill or void is not fixed and can therefore happen during any market period or condition. Okay, this is very, very important. If you're listening, you need to make sure that you take these considerations into account whenever you're using this tool, right? By saying time period for price fill of void is not fixed and can therefore happen during any market period or condition. Second thing we are saying is monitor for market structure or MSS, right? Monitor for market structure. Sorry, this is actually market structure shift, not a market structure. So we are saying you monitor for the market structure shift, okay? So market structure shift, we are saying that before we had equal highs and equal lows. So the moment the price discovery is distorted by having breaks of those equal highs and equal lows, then we are now experiencing what we can call a market shift. And now we need to be positioning for buys in the direction of that shift, okay? So monitor for market structure shift, okay? Where price discovery is developing or forming into a bearish or bullish FVG. The other thing you monitor for is monitor for other signs of trend reversal or build up of price action. The fourth thing and most important is mark the liquidity sweeps as indications of directional bias in a trending market, okay? So what do I mean by the liquidity sweeps? So the liquidity sweeps look a bit like this. So if I go to the chart, we're talking about times when you see the market, making these kinds of moves. So for instance, now when you go on gold, you'll notice that gold was doing something like this, okay? We had a nice move up, okay? And immediately we had that nice move up. We saw that there were a lot of sweeps that were formed on the market. So if you zoom into gold here, you can see that we had sweeps, many sweeps. So you can see there were some sweeps there. We also had the same sweeps happening around here, these kinds of sweeps. So when you have these sweeps on the market, it's just simply telling you that there's an imbalance that is now forming where buyers are trying to take charge of the market, and this imbalance in this case is a buy side imbalance, and that's why you're seeing price moving higher. So when you have sweeps moving in line with where the market is going, that essentially then shows you that there's a shift of movement much higher, okay? So you can see that since we are in an uptrend on gold, those liquidity sweeps are moving higher. If it was a downtrend, the liquidity sweeps would be moving lower. So you can see here when gold was trending lower, and of course, when we had that buy-side inefficiency forming, you can see that the sweeps were here. We had another sweep right here. We also had another one right here, and you can see, when those sweeps got done, okay, that's when now price started changing, and now you can see it now started to move higher. Awesome. So that's it for today, guys. I wish you all an amazing trading this week, and I hope to see you guys on Wednesday for the market snapshot. I hope you've been able to understand how this tool works and how you can actually use it in your trading to help your trading become more profitable. Cheers, guys, and have an amazing evening, and I'll see you all next time. Okay, there are just some questions here. Mercy, you're saying, is there a specific tool for this indicator? Not quite. And of course, there are very many tools you're going to find on TradingView, but the purpose of this class is just to show you how you can actually use this in your trading. And of course, how you can understand, because yes, you can have an indicator that you can use, but it's important to understand what are the factors that drive, what are the factors that drive these imbalances, and how can you, as case, how can you, of course, now use this to ideally trade, okay? No, but you're saying, Robbie, you're saying, no, but is there a difference between ICT and SMC? So ICT in full is inner circle trader, and SMC in full is smart money concepts. Okay, so smart money concepts was just a tool that was coined. It was actually there much earlier, even before ICT. And of course, we are saying that retail trading evolved, whereby traders are now taking into account, things like, what moves the market, aside from just understanding. Aside from just understanding price action, understanding technical analysis, what are the ins and out of price delivery and price movement? Okay, so we are saying things like understanding, like for fundamental news, understanding things like the futures market and how that feeds into your CFD trades or your CFD prices, so things like that. Aside from just taking into account technical analysis, what are the other things that could ideally lead to price, displacement or price movement to certain areas? So those are the things that we now take into account when we talk about SMC. Okay. So Sinba Santorix is saying, are you here every day? No, I'm actually not here every day. We'll be able to meet, I think, on Wednesday for our snapshot. But of course, those of you that are in Kampala, Uganda, or even in Kenya, we have a morning class every day, at 11 a.m. So you can make sure you attend the class so that we can engage more. The classes are run from Monday to Friday, and we can be able to engage more in those classes. So I think that's it. I wish you all an amazing trading time, guys, and we'll meet next time for another session. Cheers, guys, and have an awesome time.